Welcome to The Explainer. Today, we're jumping head first into the world of cryptocurrency. We're going to use the expert advice from investor Raoul Pal to build a really clear step-by-step roadmap for anyone who's just getting started. So we're going to walk through the whole journey, right? From making that very first investment to putting your crypto to work for you, and we'll even touch on the kind of wild frontier of NFTs. Okay, so let's get right into it. For anyone who's a total beginner, the biggest question is always the same. Where on earth do I even start? And really, this is the core problem, isn't it? The old ways of saving money, putting it in a bank account, they just aren't cutting it anymore. And that's exactly why so many people are looking for something different. So Raoul Pal's advice here is really designed to take the stress out of this whole thing. Look, trying to perfectly time the market, it's pretty much impossible. So instead, he lays out this simple three-step approach. First, you wait for a bit of a dip. You don't want to be the person buying at the absolute peak of the hype, right? Then you get started with an amount you're actually comfortable with. And finally, and this is key, you start consistently investing smaller amounts over time. And that strategy, it's got a name, dollar cost averaging, or DCA. And trust me, as a beginner, this is your best friend. Why? Well, it totally takes emotion out of the game. You're just investing a fixed amount on a regular schedule. So when the price is low, you automatically buy more. When it's high, you buy less. Over time, this smooths out all that crazy volatility and helps you build a really solid position at a great average price. Now, you've probably seen there are thousands, literally thousands of different coins out there. It's so easy to get lost. So the advice here is simple. Keep it simple. Just start with the two big pillars of the crypto world. Bitcoin, the original digital gold, and Ethereum, which is the platform that so much of this new financial world is being built on. Think of them as the bedrock. You start here.
Okay, so now let's move on to the next level. Because once you actually own some crypto, you don't have to just let it sit there and hope the price goes up. No, you can actually put it to work for you.
So you've done it. You've made your first purchase. Awesome. Now what? Well, this is where the real magic begins. It's when you make your assets productive. And the key to unlocking all of that is a little something called DeFi. So what is DeFi? It's basically a whole parallel financial system. Just imagine everything your bank does, lending, borrowing, earning interest, but it's all built on the blockchain. So there's no big company in the middle calling the shots. You are in control. And wow, this comparison really says it all, doesn't it? Why is there such a massive difference? Well, think about it. Your traditional bank has huge buildings, tons of employees. They're the middleman. DeFi is just more efficient. You're lending your assets directly to others through code, so you get to keep a much, much bigger piece of the pie. We're talking yields from 3% to over 20%. It's a completely different universe of earning potential. But wait a minute, I hear you say crypto prices are crazy volatile, right? Absolutely. So what if you could get those amazing high yields without the wild price swings? Well, that's exactly where stablecoins come into the picture. Stablecoins are a really simple but incredibly powerful idea. They're just cryptocurrencies that are designed to hold a steady value, usually pegged one-to-one with something like the US dollar. You can just think of them as digital dollars that you can use in this new world of DeFi. And this is where it gets really powerful. By just lending out your stablecoins on these DeFi platforms, you can potentially earn an 8 to 10% annual return. Just let that sink in for a second. That's a high-yield stream of passive income on an asset that's designed to be stable, to not have those crazy price swings of Bitcoin. And look, this isn't just some theory. Raoul Pal tells this great story about his friend who did exactly this. He cashed out his Bitcoin profits, moved it all into stablecoins, and now he literally lives off the interest. For him, the whole traditional banking system, it's a thing of the past. And that really brings us to the fundamental question here, doesn't it? What is the core difference between the old financial world we all grew up with and this new world that's being built right before our eyes? A story about Raoul Pal's father is just a perfect and kind of sad illustration. His entire retirement plan was built on government bonds that used to pay 5%. Solid, right? But a decade later, those same bonds pay less than half that. It forced him to start dipping into his life savings just to get by. The old safe money just isn't safe from losing its value anymore. And it's not just about earning a return. Look at something as basic as sending money. When Pa wants to send money to his family back in India, he's looking at days of waiting and fees that can be as high as 10%. It's crazy. With stablecoins, it's pretty much instant, costs just pennies, and he doesn't have to ask anyone for permission. Okay, so this brings us to a super critical point.
This isn't about finding some magical world with zero risk. That doesn't exist. It's about choosing your risk. The old world has that slow, creeping risk of inflation eating away at your savings and the possibility of bank failures. The new world? It has different risks. Technical risks, like bugs in the code, and, this is a big one, the huge responsibility of truly being your own bank.
All right. Now let's take a little trip to the very edge of this new financial world, a place that's built entirely on this idea of digital ownership, NFTs. And I gotta be honest, this is easily the most speculative and complex area we're gonna touch on. So what is an NFT at its core? It's really just a unique digital receipt, a proof of ownership that lives on the blockchain. It's a way to prove that you and only you own a specific digital thing, whether that's a piece of art, a song, or even a pair of virtual sneakers for your avatar in a game. But how do you actually make money with these things? Well, in a moment of pretty incredible honesty, Raoul Pal basically says, I don't know. He makes it super clear that it's an extremely difficult market, and he expects that the vast, vast majority of these projects, probably 95%, will go to zero. So that's a huge warning sign for any beginner. So is there a simpler way to play this? A way to get some exposure to the growth of NFTs without trying to pick the 1 in a million winner? Well, yeah, just own Ethereum. Since most NFTs are built and traded on the Ethereum network, if the whole NFT market booms, the demand for ETH to power all of that activity is also going to grow. It's like selling shovels during a gold rush. Okay, so let's tie this all together. What are the key takeaways? The roadmap is actually pretty clear. You start simple with the big ones, Bitcoin and Ethereum. You use a disciplined strategy like DCA to build your position. Then, you learn how to make your assets work for you by earning yield, especially with stablecoins. And finally, when you look at the really high-risk, speculative stuff like NFTs, you approach with extreme caution. Look, at the end of the day, this isn't financial advice. It's a framework for thinking about what's happening. The traditional financial world is facing some massive challenges, and a completely new one is being built, right now, in real time. The only question left is, how are you going to choose to engage with it?